50 points above on the S&P of the February lows.
Yes.
You think we're going to go below that?
Well, in the fullness of time, I think absolutely we'll go below that. I'm pretty sure this is a bear market. I mean, people like this definition of 20% down as a bear market, but that's obviously very arbitrary. I've been around for over 35 years in this business, and I've seen a number of bear markets, and it's more about kind of how you lead into it, how it develops, and how the sentiment changes. And I think we've had pretty much all of the variables that characterize a bear market. I mean, I remember, usually something happens that really doesn't make any sense at all, and I'm kind of amazed at how it goes on longer than it should. Like back in the dot-com days when companies were being IPO'd that had no sales, let alone any revenue. That's hard to believe. And they would actually explode to the upside on the IPO. That's kind of crazy. And then we had these, subprime lending with pick-a-pay loans back in 05 and 06, and that was kind of crazy. And that went on longer than it should have. And this time, like we talked about a year ago, it was cryptos, Bitcoin, which was truly a mania. I mean, as we talked about a year ago, that it just went up. For maybe in the end it's a good thing, or the blockchain technology is a good thing, but the way it was being treated and being believed in was a mania. And then it crashed about a week after we met a year ago, and it was at 17,500 when we were speaking right in the spot. And of course now it's down about below 3,500, so about an 85% decline. And then one after another, you started to see various sectors of the global financial markets give it up. I mean, the global stock market peaked January 26th, and so did the New York Stock Exchange Composite, January 26th. But the Dow Jones Industrials, the NASDAQ, the S&P 500, all these things, one by one, started to roll over. And then come the summertime, or later in the summertime, you were down to the fangs, and then you were down to two stocks. It was Amazon and Apple, and then Amazon gave it up. And then finally, when they decided they weren't going to tell you how many phones they sold anymore, Apple gave it up.
That was the last straw?
That was kind of the last straw, yeah. And it was really, October 3rd when the tariffs, it was that USMC, whatever it's called. It's really NAFTA, but now it's called USMCA or whatever it is. And it was announced that that we would have this change in NAFTA that would lead to a requirement that a certain fraction of car parts be made in higher cost locales, which basically meant not Mexico. And a senior executive at Ford Motor said, well, obviously, we're going to have to raise the prices on our cars if the input prices are going up. And suddenly the market seemed to wake up to the fact that this was real. And the next day, the stock market tipped over. In fact, on October 3rd, Jay Powell,